Welcome to the Deep Dive. Today we're really digging into something critical. It's about how weaponized artificial intelligence is, well, fundamentally undermining the global financial system.
It sounds dramatic, but yeah, that's what the data suggests.
We've gathered insights from recent U.S. Treasury reports, the Federal Reserve, industry analyses, basically trying to understand this clash.
The clash between criminals innovating at light speed and, frankly, our established, sometimes slow-moving banking security.
And we have to start with this really stark warning. It comes right from the tech world itself. OpenAI CEO Sam Altman.
Yeah, that was quite something.
He essentially said AI has already, right now, fully defeated the core security methods banks use to protect your money. Just defeated.
It's a huge statement, and it signals this shift where things like deepfakes, synthetic identities, they're just systematically walking past security that was built for, well, a world before advanced AI, the pre-AI era, really.
And the numbers, they really paint a picture of how fast this is happening. Take deepfake fraud attempts in fintech. They soared by 700% in 2023 alone.
700%. It's not a future problem, is it? It's here, now.
Absolutely hitting financial stability right now.
And the cost. It's just eye-watering. U.S. lenders' exposure from synthetic identity fraud.
So that's where they mix real and fake data to create a new person.
Exactly. That exposure hit a record $3.2 billion.
Like $3.2 billion.
Just in the first 6 months of 2024. That's up 7% from the year before. Just think, over $3 billion lost in half a year to identities that shouldn't even exist.
What's really concerning, too, is how easy it seems to be getting. It used to feel like this was nation-state stuff, right?
Or highly specialized criminal gangs, yeah.
But now, these high-impact fraud schemes, the barrier to entry is just plummeted. You mentioned deepfake as a service.
Available for around $16,000.
$16,000.
For the price of a decent used car, someone can get the tools to potentially launch fraud campaigns worth millions.
It turns sophisticated crime into a commodity.
It really does, and that's the central question, isn't it? Can these big centralized financial systems stay secure when the attacks are this fast, this cheap, and this easily available?
Okay, let's unpack this weakness Sam Altman pointed to. What exactly is AI exploiting?
Yeah.
Why are things like voice prints suddenly obsolete?
Well, Altman was incredibly direct. He said AI has fully defeated methods like voice prints.
Right.
He even called relying on a voice print to move money a crazy thing to still be doing.
Crazy. Why? What can the AI do?
It can analyze a voice, replicate it, and reproduce it so accurately that the bank's system, it just can't tell the difference. The real person, the AI fake, indistinguishable to the machine.
And we saw a real-world, terrifying example of this in Hong Kong in 2024.
Oh, that case was chilling. It shows a total breakdown of trust, both visual and auditory.
What happened there?
A finance worker transferred $25 million, $25 million, to scammers because they were on a video call. And they thought they were talking to their company's senior executives, but everyone on that call, every face, every voice was a deep fake.
Every single one.
Everyone. Generated by AI in real time, it shows that traditional checks like facial recognition or even liveness detection.
Where they check for blinks or small movements.
Exactly. Those are proving useless against these advanced deepfakes. They were designed to spot a static photo, maybe, not a dynamic AI simulation.
So that's the biometric side. Let's switch to the other big threat vector. Synthetic identity fraud. People sometimes think, oh, it's fake, so it's victimless. A corporate problem.
Yeah, that's a really dangerous misconception. It is absolutely not victimless.
How so?
These fraudsters, they don't just invent identities out of thin air. They often start with real stolen data points like social security numbers.
Stolen from real people.
Yes, and then they combine that real data with fake information addresses, phone numbers, you name it. They build this hybrid identity.
And then what? They just use it immediately.
Often, no. They let it mature. They build up a seemingly legitimate credit history over time, sometimes years, making small transactions, maybe paying off small debts, making it look real.
So it lies dormant.
Exactly. It builds credibility, passes initial checks. Then, when the time is right, they cash out, big loans, credit cards maxed out, then disappear.
So whose real data is being exploited to create these? Who are the initial victims?
They're often people whose data isn't actively monitored.
Hmm.
We sometimes call them silent victims.
Like who?
Think about children, maybe under 14 or 15 before they've ever applied for credit. Their social security numbers are clean, unused.
Right, nobody's checking their credit report yet.
Exactly. Or the elderly, perhaps. Or even people who are incarcerated. Their data isn't being actively used in the financial system day to day.
Oh, fraudsters exploit that lack of monitoring.
Precisely. That legitimate, unused data point, like a child's SSN, acts as the anchor. It gives the fake identity just enough credibility to get started, and from there, it snowballs into this multi-billion-dollar problem.
Okay, this is where it gets really complex. The threats are moving incredibly fast. The pressure is obviously on the federal regulators to respond. But is their usual approach, centralized top-down regulation, actually creating new vulnerabilities? Making things worse, maybe?
Well, if you look at the government's own reports, like from the Treasury, they are flagging systemic risks that centralization seems to amplify.
Like what?
A big one is concentration risk.
Concentration risk, meaning
It means that developing these advanced AI defense tools is incredibly expensive. It requires deep, specialized expertise.
so most banks can't build it themselves.
Right. Many financial firms end up relying heavily on AI models developed by just a handful of external specialist vendors.
Ah, I see. So you end up with maybe just a few companies providing the core AI defense for huge swaths of the banking sector.
Exactly that. And that creates this massive single point of failure potential.
If one of those key vendors has an outage or gets compromised by attackers,
The disruption isn't just one bank. It could cascade across the entire system almost instantly. It's a huge concentration risk.
and meanwhile, what's the regulatory response looking like? Is it keeping pace?
Well, the Treasury report suggests the focus is on enhancing existing frameworks, trying to fit this new AI threat into old regulatory boxes, and developing consistent federal-level standards.
Which sounds sensible, but
But the process is inherently slow, administrative. It struggles to match the speed of the threat. There's talk about clarifying how voluntary guidelines like the NIST AI risk management framework,
NIST, that's the National Institute of Standards and Technology.
right, how that voluntary framework fits within existing mandatory risk rules. It highlights the friction, the complexity.
It sounds like trying to patch an old boat while a speedboat attacker is circling. Does adding more bureaucratic layers, more compliance hoops actually help when the criminals are iterating for $16,000 a pop?
That's the critical tension. Does this centralized regulatory approach inadvertently slow down the deployment of the very private sector innovation needed to fight back effectively? It bogs things down in, box checking.
And then there's the black box problem you mentioned earlier.
Oh, absolutely. Modern AI, especially the most powerful stuff, it's incredibly complex. It's often very difficult, maybe impossible, to explain exactly how it reached a specific decision.
The explainability issue.
Right. So if an AI flags you as a risk or denies you credit, the bank might not be able to tell you precisely why.
But regulators demand transparency, accountability.
Exactly. So if the best defense tech is fundamentally opaque, but compliance requires transparency, you hit a wall. The regulators are demanding something that technology by its nature might not be able to provide easily. It creates this gridlock.
Okay, it really does sound like an arms race.
Like-
If AI is the weapon being used against the banks.
Then the only real defense is likely better, faster, more agile AI deployed by the private sector, driven by the necessity to survive, not just by regulation.
So what does that better AI defense look like? What are the cutting-edge strategies being used right now?
It has to be multi-layered. You can't rely on just one thing. But definitely moving beyond those vulnerable methods like basic voice prints or simple facial scans.
So give us an example. What's a next-gen biometric system?
Something like one-time biometric authentication.
One time.
Yeah. Instead of a static face scan or a repeatable voice command, the system uses, say, controlled lighting that changes dynamically with each authentication attempt.
So the lighting conditions, the angles, they shift every time you log in.
Exactly. It makes it incredibly hard for a fraudster to use a pre-recorded video or a static deepfake because the required authentication environment is constantly changing, unpredictable. It defeats the fake by demanding dynamic, real-time interaction under controlled, varying conditions.
Okay, that helps verify the person is live. But what about tackling those synthetic identities, the ones that might have already slipped through and are quietly building a fake credit history?
Right, for those, you need deep dive analytics. Again, AI-powered systems. These can spot subtle anomalies, patterns invisible to humans that suggest an identity is synthetic even before it's used for major fraud.
And monitoring transactions in real time.
Absolutely. Using AI and machine learning not just to catch fraud as it happens, but also, and this is important, to reduce the number of false positives.
Where legitimate customers get blocked.
Precisely. Which is hugely costly and annoying for everyone. Better AI means more accurate detection, less disruption for genuine users.
And you mentioned spotting fraud rings, not just individuals. How does that work?
That's where tools like link analysis technologies come in.
Link analysis.
Yeah, these AI tools map out connections between seemingly unrelated data points. They might find the same burner phone number used across multiple different applications, or a recycled address, or similar device IDs. It helps uncover the hidden network behind the individual Frick accounts.
Connecting the dots.
Exactly, to see the whole organized operation.
And what other, maybe less obvious data points are these AI systems looking at to gauge if an identity is real? The depth of identity, you called it.
They're looking at behavioral profiles, going way beyond just a credit score, things that indicate stability, history,
Right.
like how long has the associated cell phone number been active? Is it a brand new burner phone, or has it been linked to the person for years? What about the age of their email address? What are the characteristics of the device they're using?
So a red flag might be a brand new phone, a brand new email, a new social media account, all suddenly applying for a big loan.
That's a classic indicator of a hastily constructed synthetic identity. Real people usually have established digital footprints. The AI looks for that depth, that history, to separate genuine customers from the fakes built overnight.
Okay, let's try and bring this together. A final takeaway for you listening. We've clearly seen AI expose these massive, multi-billion-dollar holes in our basic financial security.
Yeah, systems that were honestly struggling even before generative AI really took off.
It feels like a crisis of speed. Technology is just accelerating way faster than the old ways of control can handle.
I think that's the core lesson here. You have this exponential technological threat. It demands equally fast, adaptable technological solutions, and those solutions are likely to come from competitive innovation in the private sector.
Not primarily from regulation.
Relying only on slow-moving, centralized regulation. That seems like a recipe for staying vulnerable. The regulators are, almost by definition, always playing catch-up to the fastest innovators, whether those innovators are building defenses or launching attacks.
So that final thought. The Treasury is recommending enhancing existing rules, pushing for consistent federal standards. That sounds like prudent oversight.
It does on the surface.
But as AI keeps accelerating at this pace, you have to ask, does that very push for centralized control, for standardization, risk creating so much friction, so much concentration among a few approved tech providers?
That it actually slows down the development and rollout of the diverse, high-speed, AI-powered defenses the system desperately needs right now.
That's the dilemma. Control versus agility. Centralization versus innovation speed. That feels like the critical balancing act for financial stability today.